good morning and welcome to Mumbai. I'm actually quite excited to learn that this is your first time here, and I hope this will be the first of many more. Thank you for your participation and for supporting GFF. This morning, we're here to talk a little bit about policy, strategy, financial inclusion, financial literacy, and responsibility towards consumers from a market perspective. And before I go into the list of questions that we have for Mr. Tonka, what I'd like to do is just take a minute to observe a little bit about your background. So we've already had an introduction on your official role, but I understand that you hold a legal background, you've focused on banking and capital markets over the years, and you're actually very passionate about executing change in this space. Would you like to tell us a little bit more about you and, what it is that drives you to be focused on the future of fintech?
Yes, many thanks. Great to be here in Mumbai. A very impressive venue here, and I'm primarily here, of course, to see and to learn how India is addressing all these fascinating aspects around fintech, and to see how you deal with issues which are arising everywhere in the world, and maybe we can just adopt something, learn something. I'm pretty sure we can. So yes, my personal background is I'm primarily a politician. I'm a member to the German Federal Parliament and also an executive role in the Ministry of Finance. I'm a State Secretary, Deputy Minister, and responsible for a financial market budget. And in this capacity, I have from the very beginning been fascinated about the vibrant and dynamic development of the fintech sector and all the challenges for society and the regulation, the policymakers to address that. And we have decided in Germany that we want to promote fintech. And this is only possible if you really have the international context and you learn from each other, you have dialogue with each other.
Now, I couldn't agree with that more. Thank you. So with my background, I spent 20 years in capital markets and 5 in venture capital and venture partnership. And whilst I'm originally from the UK, I've had the pleasure of living, working, Germany, US, India more recently through the pandemic. And I do have to say that when I arrived here in 2019, I saw a very different deviation of fintech. And we can see that transpiring in the market. And India is now branded 3rd largest fintech market in the world. Germany is the 4th. I think both geographies have a lot to learn from each other, but a lot to do together to inform scale in a measured, controlled, and responsible way. And that brings me to our first question. So I'd like to get your view, Mr. Tonka, on what you feel are the comparables from a strategy perspective for fintech broadly between Germany, India, and across the European Union, and what you're seeing and feeling.
Well, I think there are many similarities in what we have to see as opportunities, of perspectives, and also of challenges, how to deal with them. First of all, I think opportunities, financial inclusion, easy access, cheap and uncomplicated access of people, of a vast number of people to really high quality financial services. Also very important as we consider ourselves to be an open economy, Germany, Europe, which wants to cooperate with the world, which is global in thinking and in acting. Of course, fintech is a fantastic chance to reduce transaction costs, to integrate further in the financial and the capital markets and the payment cross-border and across regions in the world. So international integration is not to be underestimated as an element, as a perspective and opportunity of fintech. And at the same time, of course, we have a dynamic technological advance. We see crypto assets, we see the use of artificial intelligence, and much more. And of course, we have to define the interaction of fintech companies with traditional banks and insurance companies, or with the central banks and other stakeholders. And I think that's pretty much the same everywhere in the world. And it's going so rapidly that we need to exchange our views and develop our strategies and do it at best in an aligned way so that we and our systems are interoperable and that we can benefit from each other.
Thank you. And there's some very interesting perspectives there. So you touched on AI, touched on financial inclusion. you touched on a number of topics that we'll get into a little bit more as we get through the next sort of 25 minutes. Let me start with the AI piece, because that's often considered a double-edged sword. Earlier this year, I was sharing an example with a colleague where we were talking about the fact that the Washington Times printed an article that basically said that AI is a disaster. It's taking away jobs. It's causing homelessness. It's kind of bringing families into the poverty trap, because it's taking away opportunities that people historically had. At the same time, in that same week, there was an article in India that was published in the press, and the lens was entirely different. It was about upskilling women and upskilling communities and their families. And the article talked about the fact that the salaries that these ladies would be receiving from being trained to conduct roles in the AI ecosystem would give them salaries that no one in prior generations in their families had, that no one in their cities had. And so it rebaselines salaries in India in a beautiful way, creates progression, uplifts people, removes them from the gaps or the traps historically associated with financial exclusion and with financial disempowerment. So 2 different parts of the world, the same week, very different lenses on the same topic, the interjection of AI into financial services more broadly. What's your view on that, and how do we manage that moving forward?
Well, we need a much broader awareness and discussion around AI, I think, because this is really disruptive and it's changing everyone's life in very short time. So we need more awareness, and of course, never in life you have only something which is only good and has no disadvantage, or vice versa. But I tend to say we need to focus on what AI can achieve, what AI can improve for our lives, and we need to really to harvest that. And of course, must try to minimize unintended effects. But with a positive general view, I believe, in most economists in Germany as well, that in our society, which is aging, AI may be really a game changer to enhance productivity further and to allocate resources, also human resources, in a better way, by indeed making things superfluous, which are now doing in the traditional manual way, automizing that. That may be really a boost for productivity and for welfare. And when it comes to the financial sector, I see many chances really to engage and to use AI in a positive way. Creditworthiness assessment, compliance tools, fraud detection, for instance. Also in the insurance sector, risk calculation, risk management in the back office. There are many potential applications which are seen positive. Of course, you also need to discuss whether you need to regulate AI in a sound manner, which means, for instance, you need to avoid biases, you need to have certain transparency on how certain AI models function. You need to avoid discriminatory effects, that we don't have financial exclusion through certain AI tools and not inclusion. So that is, of course, to be discussed. Europe has tried to regulate it through an AI Act, which, depending on the criticality of AI applications, their sensitivity, for instance, for security, for national security issues, the requirements to the AI are higher, are more qualified than for other less delicate issues. So we try to regulate that to increase transparency. And therefore, we have legal certainty around AI, and now we are indeed trying to apply that. I think that's what we have to do. But specifically for the financial market, I see many potentially useful applications of AI, and we should be very open and raise the awareness of the potential of these technologies.
So, as with anything, AI has its benefits. It also has its disadvantages, as we are still evolving with the capability of technology and risk protection measures around vulnerable customers. So if we have customers that are perhaps included in the banking ecosystem, but are not entirely financially literate, and sometimes, in the sort of Western world, the vulnerable definition of customers may be elderly, maybe people who are not active participants of the financial inclusion system. They may have bank accounts, and we were discussing earlier that, you know, the financial inclusion, if you look at how many people have bank accounts or lack bank accounts in Germany, it's those that lack, it's less than 0.02%, which is phenomenal. But what does that actually mean? Do these individuals understand how to utilize the provisions that are made available to them? And you know, in the UK, I work with a group that has informed parliamentary change in recent years on the subject of economic exclusion and terms of economic abuse, which is now a consortium that's signed up to by the Banking Standards Committee. So the regulators say that all of the banks need to have responsibility around what a vulnerable customer looks like, whether or not they have access to a bank account, whether or not they have access to certain products. The banking economy, the banking fraternity, and the regulatory principles need to support consumers in the right way, because if they don't, then we as a fraternity are responsible. What's your view on that, and how does that compare in Germany?
Well, financial inclusion is certainly something that is promoted through new digital technologies, no matter whether it happens in the traditional banking sector, which of course is not asleep, which is also digitalizing, which is also changing its business models, as well as challenges, new competitors, newly founded companies which can develop the technologies just from the green field, which is a big advantage. I mean, probably the most people from traditional banks tell me the biggest challenge in digitalizing is that we have a grown IT landscape, which has grown and developed over decades, not centuries, but decades, and to repair that in an ongoing process where you have existing customers is much more difficult than having a newly founded company which can really start from scratch and do it in an ideal way. So, but this is what promotes innovation and which puts pressure on the established companies and therefore creates added value, added welfare for all of us. And it's a good thing. Yes, the financial inclusion is in Europe, in Germany, for instance, is generally highly developed. Almost 100% of our people have a bank account. Everyone has the right, the statutory right, is entitled to have a payment account. So not a credit account, but with a credit element, but a simple payment account must be granted to everyone. So that is just regulated. We have vast consumer regulation in this area. There I don't see any problem, but we are lacking still participation of many of our people in the capital markets. We have probably in many cases an uninformed treatment of investment saving, people who just don't deal enough with saving in a sound manner, with also using the capital markets. And this is something which has been pushed by new technologies, by neo-brokers and other suppliers of digital services, and we see the effects already. So something is changing in society, in the mentality, in the investment culture, through the easy accessibility of investment products through neo-brokers. That's really changing fundamentally the attitude of the people to the whole issue. And that's what we need. And of course, it must be complemented with sound development of financial literacy, with indeed the ability of the people to make judgments on their own financial matters in a sound manner.
Yeah, and I think, again, having spent many years in this ecosystem, I've also seen that we talked about welfare. One of the benefits is that you are providing that literacy as you're seeing the adoption rates. And I think I read that in Germany, you've got more than 1,000 fintechs and you've got a adoption rate of about 64% year on year, which is fantastic. But from a welfare perspective, you're also upskilling and reskilling people as well from an employability perspective. You're also sort of looking at the transmission of the fintech provisions beyond fintech sectors. So there is, in every country in the world now, there is, and yesterday we were discussing this around UPI, there is a mesh for financial services propositions and capabilities to be made available in non-traditional, financial services economies. And I think that supports the literacy piece, but it also means that for certain segments of your socio-demographic cohorts, there are difficulties and challenges around risk. So one, we were discussing yesterday that one incorrect payment error that could be a fraud could shut down, the global system for weeks, if not months. How do you take measures in Germany to prevent or monitor or support these sorts of incidents? And what is the perspective on welfare from an employability perspective when it comes to reskilling and upskilling people as employees, not just consumers of these propositions?
Well, it touches indeed very, very difficult trade-offs we have to make. We have to enable innovation, which means giving advanced trust into certain new technologies, new business models, giving it way and space to develop, and at the same, while not perfectly knowing where it will end up and where maybe specific or new risks are. This is necessary for innovation. At the same time, of course, if you allow for big mistakes happening, then you may even undermine the whole process and fall far behind because people don't accept that. In Germany, for instance, there was, more than 20 years ago, there was really a high popularity of investing into stocks with sometimes poor knowledge on diversification of your portfolio. So people just traded, but did apply wrong strategies. And when then the dot-com bubble indeed occurred and splashed, then many people had lost quite a lot of money, and that meant that for more than 10 years, even 20 years almost, investing into the stock market was very unpopular. So that happens if you do it the wrong way, the right thing, but the wrong way. And now we have, of course, to find the right approach to new technologies to avoid extreme backlashes. What happened to FTX in the United States, for instance, of course, has undermined confidence into the market for crypto assets. That's a fact. Yes. So it would have been wiser in the sense and in the interest of the crypto market to find a profound, sound regulation on that issue, which builds trust of the consumers, of the investors, and avoids extreme failures and other things which harm the whole market. And that's what we try, for instance, in Europe to do with MiCA, with the Markets in Crypto Assets regulation. It is designed to build, to establish minimum standards, to say we don't want to see any potential idea of how you could earn money with crypto is implemented in Europe necessarily, but we want to have a sound standard, minimum standard of investor protection and of supervision of AML checks, by the way, also. And I think we have done or delivered quite a good framework which promotes innovation but secures that there are certain supervisory standards. And this is what we should indeed apply in other areas as well. Not to interfere into the market, into business models, but to secure that there are certain standards and that investors can rely that they are not frauded and indeed that there are unsound business models there. But you see sometimes, of course, that the discussion around a sound and proper regulation of new technologies is an invitation for lobbyists of all kinds and all kinds to promote their own interests. For instance, in Europe, we had a discussion around certain business models and remuneration models for neo-brokers, a model which is called payment for order flow. Now, this was applied by neo-brokers who had provided digital access to investment products, to investment services at very, very affordable and competitive prices. And the result was that the traditional parts of the traditional banking industry attacked that remuneration model and successfully lobbied in Brussels it to be banned, which is a backlash for the competition and innovation on the European market. But we have to be prepared, and I think that's probably everywhere the same risk, that under the umbrella or the pretext of finding a sound solution in the interest of investors and consumers, other lobbying interests, other interests, business interests are promoted, and it can end up also in harmful legislation and regulation, and that must be avoided and should be better avoided in the future, I think.
Absolutely, and I think that resilience piece is key, but that also is difficult to maintain, especially when you're seeing the emergence of capabilities that have never existed previously. And we're seeing that transition into other sectors and verticals. So you're going beyond pure fintech or beyond pure financial services. So when you're sort of having a transmission of fintech propositions in non-fintech ecosystems, that becomes harder to regulate. Tell me, you've got around 300 billion digital in 300 billion euros being made in digital payments annually. You've got the average ticket size per neo-banking transaction of around 30,000 euros per user. The average daily payment for a transaction per user attributes to around 4,500 euros. There is a lot of volume-based activity which is impactful at an aggregate level. And when you look at cross-border payments, how do you regulate and contain that?
Well, for anyone who wants to provide payment services to consumers, anyone is required to obtain a license in the European Union. It's sufficient to have one license in one EU member state, and you can serve the whole market. Cross-border is no problem then. And this sort of license is some form of micro banking license. It's not a full program in particular, not relating to own funds, equity, etc. But you need to provide, for instance, that indeed the funds of your clients are safe and are protected against insolvency of the payment provider, that they are separate on trust accounts or anywhere else, and not affected by a potential insolvency. And you have to provide that you have the operational capacity, the IT systems, the redundancies, and emergency mechanisms that are required to provide services in a technically successful manner, and that there are no disruptions or interruptions which may cause harm. And this is all supervised. Digital resilience against cyber attacks, etc., is supervised. But if you fulfill these criteria, you can perfectly provide cross-border payments within the European Union, also amongst consumers. When it comes to payments to other parts of the world from Europe, that is a bit more complicated, but still, of course, possible. It depends. I think, in fact, it depends more on the regulation in the target country of a money transfer, of a payment, than on European regulation, and vice versa. Also, if you make a payment inside Europe from outside, that's also not covered by that regulation, but is more or less something that is in between. I think for cross-border payments, if you look at Europe as a whole, and then, for instance, ask cross-border payments between India and Europe, it is primarily an issue that we really have the settlement systems, that they are perfectly operating with each other, that we have no time lapse, that we can also work towards instant payments in this area. That means that we need to define standards, technical standards and other standards in the settlement system, so that we really can accelerate that process. And I think that's really a task we have ahead of us.
Thank you. So the reason I asked this question is because I learned some staggering facts recently. Over the last 5 years since I moved to India, I've observed, having worked closely with regulators, that they've done a fantastic job in actually looking at what other countries have done well, particularly in the West, Europe, US, adopting those policies very quickly in India to create the right provisions and the right playground for fintechs and for consumers to be able to experiment, but in a sort of environment where there is consumer protection available, or where there is protection for the organizations available. At the same time, they've also been very innovative in their thinking and creativity, and you see things like the Unified Payment Interface, which has given accessibility to a lot of people that were traditionally unbanked or underbanked through eras like the pandemic that we've all experienced, to come in and be financially active. However, stat that I learned earlier this month was that fraud through personal relationships in India is up 153% year on year. And quite often that links back to cross-border payments. So you have layers and layers of payments between channels of parties, typically individuals acting through different entities in different geographies. And there is a lot of this with Europe, and that is increasing and very, very difficult to contain. So do you have any suggestions for us on, what might be happening across the pond over in Germany, or what we could consider doing as we move forward to try and contain that? Because it's something that at the moment doesn't have the right legislation around it. It's new, it's emerging, but it is fast scaling, and it's something that needs to be addressed.
Certainly it has to. I believe, first of all, I think India has shown immense capacity to innovate and to spread new technologies in really an impressive way and speed, with UPI being really famous and popular far beyond Indian borders, and I think the first retailers who accepted in Europe as well. So I think that is first of all a tremendous achievement. But as any process which is going very fast, there are people who try to seek their chances to benefit in the one way or the other from it, and some are illicit. And I'm sure it will be addressed. It's a typical thing in very innovative phases, but if you reach a point where confidence then is decreasing, then probably the innovation and the further spread of these technologies may be harmed. So I think it must, but I'm sure it will be addressed. In Europe, we don't see such things in the same way, but we of course haven't the same speed of change, and that I think that correlates. Speed of change and abusive attempts are just correlating. And I'm pretty sure it will settle once technology is more spread, more settled, more accepted. You know more about it, and these side effects and problems will be solved, and the regulators will find a sound approach to deal with them.
So it's a very fine line between financial crime and financial abuse. And last year, the United Kingdom made financial abuse a punishable offence under Section 76 of the Serious Crime Act of the United Kingdom. What they recognise there is that in your own family environment or in your own friends and family environment, you can be pressured as a consumer into perhaps taking out credit or supporting somebody in your name using your data or giving away your own capital to support situations that you may not feel comfortable about. I'll give you a very simple example. I worked for the second largest banking group in the world, in the United Kingdom, that has 17 different financial services brands under it a few years ago. And we were asked to map customer journeys for consumers that were elderly and for consumers that were passing away. And we saw the highest percentages of fraud where children were taking elderly parents into physical branches and basically threatening them and saying, empty out your accounts and give us access to your lockers, or you will be, homeless, or we will not take care of you. That is economic abuse. Another was where you look at customer journeys where somebody that holds accounts or assets may pass away, but hasn't perhaps left a will, or the family doesn't know where to go to access, whatever's left via probate because the provisions are not in place. And so there you have people fraudulently claiming access to money that is lying dormant in those accounts. So I think it's very important to recognize that these situations inadvertently exist everywhere in the world, and that economic abuse is also a very important aspect alongside financial crime that adds weight to some of the issues that we are seeing. Are there provisions like this in Germany, or are there discussions in Germany to bring in policy to this effect?
Well, first of all these models and attempts, I know very well. I have observed some of them. Sometimes I also get some of these text messages, and that is widespread, unfortunately, and apparently in a scale which makes it very, very difficult from the point of resources of prosecutors, of police, really to go after any of them, specifically, of course, because they are often committed in an international context. So the criminal is sitting somewhere else, and it's too burdensome to go after him. So I think the answer would, of course, be that information exchange is taking place between the police authorities in various countries, that we share the information, and that we find mechanisms to quickly go after some of these criminals sitting abroad, and not applying for some form of legal cooperation arrangement which needs months, if not years, to be granted. So cooperation between security agencies, anti-money laundering agencies is important. Europe now establishes a central European anti-money laundering authority as a big step. We are happy to host it in Frankfurt in Germany, to have the seat there. And on national level, we also form a new authority to go after systematic international money laundering and illicit fund flows, and to investigate into the backgrounds. So appropriate resourcing of prosecutors, of police, specialized financial investigators, and information exchange cross-border, cross-countries, I think is key. And we can, of course, also use forensic AI to analyze the scope, to analyze where is the money going actually, who's behind such activities. So we should indeed also beat the criminals with their own weapons and apply better AI, better forensic tools, and to find technical solutions to these high-scale crime we see sometimes on the financial market.
And we're seeing other countries do that. So in the GCC, we're seeing Dubai and Abu Dhabi following similar protocols. So I think the concept of a unified global approach really makes sense. And we'll probably see more of a shift towards that as we get through the next sort of decade. Talking about forensic AI, talking about prevention of financial abuse or economic abuse or financial crime even, it sort of goes hand in hand with literacy and awareness and understanding. Could you tell me a little bit more about what's happening on the ground in Germany to support literacy in the right way for different demographics, and what sort of measures and programs are in place to uplift the current status quo?
First of all, I think we are not so bad in financial literacy. We scored at rank number 2 in an OECD survey on financial literacy. Thailand was number 1, Germany 2. So not too bad. But we see we have OECD asked to systematically analyze more details about financial literacy in our country. We see that there are certain groups which are disadvantaged, where we have more financial illiteracy. This is certainly correlating with the social status and the educational background, but it is also correlating with gender. So we see that women, in average, know less about financial issues as men. So we have identified target groups where we really must improve it. And now we are in the process of implementing a financial education strategy which facilitates access to information, centralizes access. For instance, we've launched a digital portal where you can easily see your expected pension from various sources, from the government, from your employer, from individual savings, and you can better calculate your personal prospective pension and then react. So that's what we are doing. And we are really trying to target those groups who are disadvantaged or who are behind in participating in the financial market and making their decisions there. And then, of course, I think something new arises. We see that we, of course, also have the need for quality assurance of information. We see that many chat groups, Telegram channels, and so on offer financial information, sometimes even rumors which are spreading through the market, which are not quality assured, where you in the end cannot say who is responsible for the content. And we need, this is a new phenomenon as well, we need to address that. We can't control every Telegram channel, but we really must make the people aware that there are sources which are questionable, which follow their own interests, and spread things which may not be correct. And I think this is particularly for young people who largely rely on such sources. This is really a challenge to assure that everyone also looks at quality of the information he receives and not only on speed or range of a certain channel.
So misinformation for the younger generation, and then traditional literacy improvement for women particularly. It's interesting, I was in Switzerland earlier this year focusing on literacy for women. They have a similar challenge. But one interesting statistic I learned there was that almost over a third of women who are killed every month are killed by their partner or by a male in their family, and it attributes back to a money-related issue. So it's about control over money. So even though you may be literate because the government is providing the provisions and they're educating you, and they're giving you access to portals where you can see what your holdings are, what your net worth is, you may not necessarily, because of the social construct, be permitted to execute decisions on your finances yourself. And if you do as a woman, even in the Western world, where we hear about this less versus, let's say, some of the Eastern countries, you may not have the autonomy to execute your own decisions. Do you see those sorts of challenges in Germany?
It is a factor. It really very much depends on your personal situation or the traditions, the culture, the background in which you are living, the way you are organizing your family life. Very different. But yes, of course, this is the broader context, and the broader issue is indeed that yes, financial literacy is an element of personal independence, and the strengthening of the individual, and it is a prerequisite for achieving that. And at the same time, of course, taking the financial decisions, your own financial decisions, requires that you have already acquired a certain independence and an independent role in your family, etc. So that is a bit of a circle. But I'm pretty sure we can improve it. We can improve it because yes, indeed, the women are those where we have really to take particular care about when it comes to pensions, for instance. That is absolutely true, and but that's what we are trying to target in our financial education initiative. It's not addressing every group in the same manner, but really having a focus on those groups who need specific strengthening and specific address by us.
Thank you. And as we move forward into the next sort of decade, what sort of fintech propositions do you think could support some of these challenges, whether it's around risk, whether it's around literacy, whether it's around inclusion in the fully informed way? What are you hoping to see through Germany, but also through other alliances and partnerships with countries like India?
Well, I think the integration of services will be a key issue. Not that you replace certain work streams which are provided in a traditional way by a digital way, but really providing integrated services, automatic execution of contracts, sort of financial home applications where you really systematically analyze finance-related data of an individual and optimize everything at the same time. And so that is, I think, the next step to integrate the processes and to provide overall solutions rather than just bringing to the market a certain product which is superior to a traditional product. That's the first step, but the next step will probably more integrated processes. And this is also applying to international processes, of course, where we really also can think about a further integration across border. But that requires, of course, that we have somewhat common understanding on minimum standards, on treatment of data, the use of AI, but also the openness to define technical interfaces. For instance, the digital central bank money, which India has started to establish. Europe is still working on a concept, but also intending to start. The better they interoperate on a technical level, the better you can really integrate or enable transactions between several currencies. Of course, the more perspective you have for the private sector to develop also integrated products and solutions cross-border. And that, I think, is an issue where you really have to work on if you want to have open economies, global cooperation, not everyone separating and fragmenting the global economy. Then you should use every chance also to allow for interfaces, to allow for cooperation, to allow for the easy development of joint solutions and products for the private sector. And that is what I prefer rather than fragmentation, although I must regret to say that too many people on this globe believe in fragmentation in these days. I do believe in the opposite, and I think we should enable the private sector to integrate at best, and digitalization is a tremendous chance to do that.
Would you say that some of that fragmentation comes because of policy? So it's, again, a double-edged sword. On the one hand, you're trying to protect the economy, you're trying to protect the growth, you're trying to keep a containment where you can measure and be diligent in your scale. But the flip side of that, of course, is that you then end up with fragmentation.
I think that is the key issue we have to decide is whether we really believe that everyone is better off in doing and providing everything on its own and being autonomous in a way to say we don't need the others, because then we feel stronger, or whether we find mechanisms to cooperate in a sound manner. And you can do both, but you are, I think, both from a political and social, but also from an economic point of view, you are better off finding ways to cooperate. And that was the idea for quite some time. Now we see rather tendencies to fragmentation and seeking some forms of autonomy, which in the end is still an illusion. I don't believe it's achievable. So let's not exaggerate that, but rather think about what we can better do to cooperate economically and in the end also politically and socially. And there, digitalization and the fintech is only one element, but I think it's certainly a chance to show that it's possible and that it generates a value add on both sides.
Thank you. So we've touched on a lot of very interesting topics. It's been very insightful. We are at time now. But I think there's a lot to take away there, and I'm sure some of our audience will have further questions for you offline. Let me come back to close the session to the topic, which is, the recent developments in digital finance. Could you tell us which are the top three that you are most excited about as we wrap up our conversation?
The top
which top three developments in digital finance are you most excited about?
Which top three?
Top three developments in digital
developments.
finance. Yes.
Well, I think open finance and integrated products. I think the potential of distributed ledger technologies as a fully new tool to prove certain facts, certain things happening, and then the digitalization of central bank money is certainly a fascinating issue where we have to take decisions on the concept and must do the right thing now, I think, to enable, for instance, that companies can use them in a proper way, and that can generate enormous welfare. So these three things: integration, blockchain, distributed ledger, and central bank currencies, I think, are the three top things that fascinate me currently.
Fantastic. Well, we'll watch this space. Thank you very much. It's been a real pleasure, Mr. Tonka. Thank you very much.
Thank you. Thank you very much indeed, Dr. Brijno, and thank you, Dr. Florian, for joining us. Thank you once again. I'd like to also please request our members of the audience to also connect with our speakers offline in case of any further questions or queries. Well, on that note, I'm going to take a quick check with my team. I think we're good to get our next session started, ladies and gentlemen. In fact, as we move ahead, before we do so, I'd also like to take the opportunity to thank our registration partner, M2P, Fintech VCP partner, Westbridge Capital, Platinum partner, Financial Times, Gold partners, MobiQuick and MongoDB, and Silver partners, Aditya Birla Capital, Pure Storage, and Credit Innovation partner, Experian. Well, let me remind you all, in fact, we are setting the stage for a very, very pertinent session. This is all about navigating the fintech landscape, best practices and common pitfalls. I'd like to just remind you all that this was supposed to be our very first session, but we are actually hosting this session right now inside the hall, which is why I'm going to urge our members of the audience to please come forward. Please very quickly take your seats. I've been informed that our speakers are inside the hall, so we're good to get the session started. So ladies and gentlemen, with that, let's deep dive into the next conversation, featuring none other than Mr. Chetan Krishnaswamy, Vice President, Amazon, and we have the august presence of Shri P. Vasudevan, Executive Director, Reserve Bank of India. So ladies and gentlemen, our very first session that we were supposed to host, but we are doing it right now. So we're going to request our members of the audience very quickly, please come forward and take your seats as I invite both of our speakers on stage. And with that, We have with us Shri P. Vasudevan, Executive Director, Reserve Bank of India. And ladies and gentlemen, Mr. Chetan Krishnaswamy, Vice President, Amazon. Can we have a huge round of applause? We're talking about the best practices and the common pitfalls as we navigate the fintech landscape. Thank you so much for joining us. And with that, over to you.
Good morning, everyone. At last, we are here, after multiple false starts. At the outset, I'd like to very quickly introduce Mr. Vasudevan, the Executive Director of the Reserve Bank of India. He has nearly 3 decades of experience at the RBI, and today is responsible for the departments of fintech, currency management, and corporate strategy and budget. He has been a key figure in India's fintech leadership story and has largely been responsible for the implementation of cutting-edge technologies and various regulatory innovations, including the implementation of RBI's regulatory sandbox and, of course, the establishment of the RBI Innovation Hub. Very clearly, before we began, he said, keep the intro really, really short, and I hope I have lived up to that expectation. And now, sir, over to you for some opening comments.
Thank you, Chetan. Nice to be on the GFF stage. And being with Chetan sometimes can be a little dicey because he is typically comfortable or aware about what the regulator thinks. Sometimes he also thinks for the regulator as well. So it's going to be tough to be with him. But Chetan, just I wanted to ask you as well, do you mind me standing there and talking, or do you want me to sit and
Sure,
talk?
please go ahead.
Okay, then I think I'll go to the podium and talk, and then I'll come back.
Please.
Yeah, once again, good morning, everyone. As you see, I have no written agenda. I thought I'll spend some time talking to you about what's happening in the fintech space and what do we talk about when we are navigating the fintech landscape and the best practices and common pitfalls. I thought, given the short time we have seen the fintechs in the country, and given the shorter time I have been with the fintechs, I would like not to talk about the pitfalls or even about the challenges, but best practices. Rather, I would like to spend some time about what the learnings have been, how have been the experience, and what could be some things that we can all take away from. And as I have always been saying, we also are learning, we also are evolving in terms of regulatory practices. When you look at the financial system, the confidence that the people will get in terms of handling money, in terms of handling payments, they are very critical for ensuring monetary policy transmission and also the financial stability of the system. And for people to get that confidence, they have to be empowered, they have to be entitled as well, be they individuals or be they institutions. They have to be entitled and they have to be enabled. And this comes with a lot of responsibilities when you want these entitlements and empowerments in terms of respect for the structures that are there, in terms of certain practices that need to be followed. Because you are all interacting with a space that is the financial sector, the financial services. If you look at the entire ecosystem, any sector, the financial services sector is one of the tightly regulated and closely supervised sector. And if anybody else has to interact with this sector, they also have to follow certain rules, certain expectations, because we cannot have those disruptions, because we will end up losing the public trust and confidence. Ultimately, it's all about money. So over a period of time, when you see the practices that have happened, we have to also appreciate the expectations from the other side when we deal. For example, you would have heard about Mr. Nandan Nilekani speaking yesterday, or even Mr. Chris Gopalakrishnan talking yesterday, about how the regulatory interventions have also been successful in heralding innovations in the Indian context, and how many of the initiatives have been to a large extent regulator-led as well. So we do think that probably the regulator also has a critical role to play in this. When we look at some of the people who want to get regulated, it's a very funny thing. When they are not in a regulatory space, some of the sectors were not regulated. When we look at payments or even fintechs, when we call somebody for a discussion, nobody will bother. They will be sending a level 3 or level 4 person, and they will say that we are too busy. But when they want to get regulated, they want to come too close, it becomes difficult and disturbing for us as well. And post getting regulated, again, it's difficult to access them. So it's a very interesting thing. And some of the people who want to get regulated, they take a registration or a certificate of authorization. And we also see that they are yet to start the business. When we ask them why, they end up saying that we are still reimagining and evolving our business practices, so give us some more time. We don't give a license to chill, okay? We give a license to operate. So you have to be mindful of that when you want to come into the space. And many of the people who want to be in, you are typically seeing a herd mentality. If some set of people are coming in, everybody tries to follow. Many of the recent sectors that have been brought into regulation, if you see, so many people are operating, and over a period of time, it is becoming a sort of a competition among themselves. Normally, when we have those partnerships, we are looking at a partnership and collaboration and competition with the banks. But here, it's among the entities themselves that these partnerships the competition is happening. So that's becoming a little difficult in terms of numbers that we need to. So I have always been saying that please, as an industry, you look at how many entities should be there in a particular space. You can also discuss among yourselves how much we can afford. So probably the SR announcement that was made yesterday could be one more step in the direction where we can have these discussions, and probably the players can also discuss among themselves and see how the sectors can come up. When we saw the announcements happening yesterday, when we have been seeing certain developments, one thing is coming to the fore very clear. That is that everything is going to be now platformized. Platforms are going to be the essence of the future, be it for the Bharat Bill Pay, be it for earlier P2P lending, be it for the threats, etc. Everything is going to be platformized. And as we go ahead, we are also going to see the interoperability between the platforms. Again, we saw one more announcement yesterday about how threats and BBPS can get interlinked. We are going to see this interlinking between maybe today UPI and tomorrow ULI as well. So those platforms are going to be the essence for everything. And when we have those platforms coming in, we are also going to see what we call as packetization. The events, the activities, the exposures, the experiences are all going to become smaller and smaller. So platformization, packetization, you have to be ready. And what I also want to add, another P is about peopleization, what we call as democratization. We call it as peopleization because ultimately the entire effort of everyone is to see that we are customer-centric, and we do all our initiatives that are customer-centric in nature. So all these 3 Ps are essential. And as we develop these packages, one mention was made by the governor as part of his talk about how we can have these plug-and-play solutions that can be developed and transported to other jurisdictions as well. So these couple of Ps are very critical for our pieces to work together and our systems to work in a harmonized manner. When we are looking at some of the expectations of the players as well, they try to, for example, expect harmonization across regulators as well. You are actually operating within the country as well across multiple regulators because the players are also moving between, say, payments, maybe lending, then they are going to wealth management, then they are also trying to get into insurance, etc. sectors. So harmonization across regulators is also one expectation. That's going to be very difficult because each of the regulators have their own jurisdictions and set of concerns that need to be addressed. So harmonization is one thing you will have to manage, you don't expect others to manage. And especially when we are looking at other territories to be added as we go forward, especially interlinking fast payment systems, Again, one more mention was being made yesterday about how many jurisdictions are there where our systems could go. So we are providing a platform that's easily available to you. If you are well established here, probably you could be easily transported, or you could be also exploring other jurisdictions as well. That's very critical. You also have heard me speak in the morning when the member of the board of the Fed Reserve was here. He was a little apprehensive about some of the issues that need to be sorted out before we can look at interlinking, say, the Fed Now and UPI. And we were trying to be very positive, saying that even if it takes a little time, it's going to be worthwhile because many things are going to be cheaper and faster. That's how we are going to work about, and that's how we are going to go in. So I would like you to have this approach when you are looking at regulation. So whenever we are trying to deal with structures, I would like you to also think that you have to respect the compliance related things. I agree, in the dictionary, capital comes first and the compliance comes later. So capital, of course, you are all very, very comfortable handling with your investors and venture capitalists. Any of their requirements you are more than eager to meet. But that doesn't mean that you can actually ignore or bypass compliance. No, that's equally important. So sometimes when we meet the venture capitalists and even those co-founders as well, we tell them very clearly that please imbibe this element of compliance in your invested entities. See that compliance is never compromised irrespective of the scale. Incidentally, like we have been having plenty of interactions with the industry. A number was again being mentioned about 700 plus bilateral, 50 plus such group interactions we have been having in the last 1 year or so. As we come closer to the industry, familiarity breeds consent. That's how it's happening. People can think that they can get anything and they can ask anything. Yesterday I was just walking around in the stall and I happened to meet two youngsters who came and immediately saw the badge and said, "Sir, we want to ask you a question." I said, "Yeah, do I know you?" They said, "No." Then they said, "Sir, what do you think are the areas in which we should enter into?" I would have been very happy to say, why don't you go to Lamington Road area or go to Koramangala area? But I just said, that's not the purpose. No, you should be having your ideas. You should be trying to know where you have to go. Asking us, okay, we are here to interact with you, but we have to be also mindful of some of those things, because internally you have to look at many of those areas where you want to get into. As I said, no, some people are saying that after getting the authorization that we are trying to reimagine, re-engineer our business practices and then decide where to go. It doesn't work. We are also trying to see that the ease of regulation is available, the compliance costs do not impact much, bring in a level playing field between the formal traditional lenders and the fintechs as well. We have tried to see, for example, one announcement was made yesterday that if you are having a payment aggregator requirement, you don't have a separate approval going forward for online, offline, cross-border, etc. It could be one. Probably going forward, we can look at having one single authorization for any of the payment system activities we are doing. So these are the things that can be facilitated going forward. For that, we need to come together. We need to have those interactions as well. But we should also understand, as part of the landscape, what is that we are looking at? You would have also heard about the repositories that are in place. I will be happy to get inputs from the industry about what are the initiatives they are doing, where they would like to get support. But that is taking some time. Probably the industry is yet to feel comfortable to come close. But let me assure you, we are as a part of you as much you think you have your fraternity with you. We are also a progressive regulator. We also want to be a progressive stakeholder in all these initiatives, because it's going to be a long journey together, and let's have a nice journey together as well. I thought I can spend a little more time talking, but I know that Chetan has lined up lots of questions. I'll take them, and then as we go ahead, let us see where we navigate the landscape and how we'll navigate as well. I'll stop here. Chetan, I come back to the table.
Thanks a lot for giving us those very interesting perspectives and taking us through the real-life experiences that you had during the course of your interaction with the industry. And, what really struck me were the 3 P's: platformization, packetization, and peopleization. And obviously that would be the essence and the future of the fintech industry in this country, is what you said. You also mentioned about the need for regulators to be progressive, and perhaps RBI in many ways exemplifies that attribute. Right off the bat, my question would be, how do you bring about a fine balance in ensuring that there is regulation, there is sort of oversight in many ways, but at the same time, you need to also foster and spawn innovation. What is RBI's sort of game plan when it comes to this?
Yeah, but many a time, thanks Chetan for raising this, because many a time this question gets asked, like, is the regulation and innovation, how do you have a fine balance? But why do you always think that if there is regulation, then innovation could be stifled? No, we have to have an orderly growth, and that can actually facilitate innovation. For example, I can take a couple of initiatives. In the payment space, we had one small, like we always approach everything with a customer-centric approach. So one of the things we said was, okay, let's have a facility where the customer could switch on and switch off the card feature so that he is not scammed or his balances do not get used. And that also has led to many innovations happening. Many of the players have actually had a good clientele because of these things, because the banks and other card issuers need to have this facility. So also with the e-mandates, now everywhere we are talking about e-mandates, and the mandates are 10x, 15x in terms of numbers year on year. So there again, innovations have come in, many more things can be built upon that. And so also tokenization. Now, I still feel, I don't know how Amazon feels, but I still feel that the card data that was stored is now democratized because it's in the form of tokens, and we are, touch wood, not seeing any breach, even when we are seeing some data leaks happening in terms of card data being lost. So many other innovations have developed on this. We had like mention about ULI, Unified Lending Interface, that could be becoming bigger than, say, UPI. And tomorrow, if UPI and ULI interact together, again, the innovations are going to happen. So I agree, there are concerns about regulation coming in terms of breeding innovation. See, one of the things I'll tell you, we had an interaction with a couple of fintechs who are in a particular space. When we asked them that we are not happy with some of the things which you are doing, they said, sorry sir, we were thinking that this is a market practice, and we were following a market practice. Now if you are the number one or number two in that particular market, and if there is a framework that has to be followed, and if you still feel that market practices swayed whatever you want to do, that's simply unacceptable. So market practices need to be dovetailed into the framework, and that cannot be something that you can decide or the market can decide. So I'm saying innovations are good, but there's a framework.
Oh, absolutely, and you kind of reinforce the need for compliance to be absolutely critical in the overall strategy of a business that is growing. Very quickly now, talking about ULI. We've had the governor also make a mention of it, and he in fact went on to say that the next big thing would be ULI, and in the MSME space today, there is nearly a $300 billion gap that exists in terms of credit, and perhaps ULI is a terrific opportunity for that gap to be plugged. Can you give us more details on what the thinking is on ULI?
See, actually, ULI will bring in multiple stakeholders on one platform, be they on the lender side, the traditional lenders, and be they on the people who need the finances, be they on the types of loan that could be made available, be they in terms of the data sources that need to be accessed to make a borrower viable or be acceptable for a loan. There could be, as of now, 50 types of data sources being mentioned. You are aware that GSTN also has been added. Of course, Aadhaar, multiple land records of state governments. Then we have milk pouring data. Many data sources are now linked to the platform. But more importantly, I want to say that we have been having this project for the last 15-16 months now. And we have seen almost 1.5 lakh loans already being dispersed, and many of the people who are borrowing, and the majority of the loans presently are by the MSMEs. If you want a micro business loan, if you want an education loan, if you want a housing loan, if you want a tractor loan, dairy loan, I can go on and on. All these are possible from the platform. And there are many more things that are going to come when we look at the benefits, but I was just want to take that point about MSMEs. See, if you see the requirement of MSMEs, we have tried to bring in different innovatives and initiatives to facilitate the credit for them. See, MSMEs have certain problems in terms of availability of collateral, delayed payments, and of course availability of finance as well. So for the availability of finance part, we have the TREDS platform. The TREDS platform are doing wonderfully well. 4 platforms are there. 2018 the guidelines were announced. Over the last 5 to 6 years, CAGR is around 60% in terms of volume of invoices or factoring units, and around 85% in terms of value of units financed. 16,000 crore is the latest number I have during a month. There what happens is that if I am a MSME seller and I give it to, say, a buyer on Amazon, now here we are looking at corporate buyers who are good buyers, big buyers. The rating is on the buyer, not on the seller. And the finance is also without recourse to the seller. And we can have a bid happening across any of those lenders who are there, banks, tractors. They can come and bid for the loan. The loan is my prerogative to accept or not to accept at what rate of interest. That's trades. If you are talking about delayed payments, this can be taken care of because the money will have to be paid by the buyer on the due date, but the lender can, the seller can get the money early. And we have recently enabled more features on the TREDS platform by way of offloading. If a financier has taken exposure, he can offload it to others on the platform. We have brought an insurance so that the financier will be comfortable to give the money. And we have also allowed many other features to come in on the TREDS platform. So we are going to see an increase. Hopefully going forward, the TREDS platforms could be interoperable among themselves as well. And with this BBPS linkage happening, Bharat will pay for business, more things are happening. And you just mentioned a little while earlier about regulatory sandbox. We had a regulatory sandbox for MSME payments as well. Multiple features have come out. And then they are trying to digitize the invoices, bringing blockchain as one element where people can actually have a consent-based mechanism. So MSMEs are going to enjoy a comfort. And one of the one of the findings was about GST Sahai that has come in to take care of this aspect of not available, having enough collateral. The cash flow lending has been enabled. You can actually have the GST linkage. We can have the account aggregator linkage. All these linkages can provide a nice platform for the MSMEs to borrow without availability of collateral. So delayed payments, collateral, availability of finance are also being taken care of. So we are conscious of these benefits required and available to the MSMEs.
Sure. On the topic of regulatory sandbox that you just mentioned, and in fact, you were a key proponent of the sandbox. And in fact, the RBI also entered into international partnerships with the Singapore Monetary Authority, etc., etc. So what have been some of the outcomes, successful outcomes, of this sort of experiment?
Yeah, see, on the regulatory sandbox, we started somewhere in 2021. We have had 5 cohorts. 5th cohort is currently live. We started with retail payments, went to cross-border payments, we went to MSME, as I was mentioning, then we went into prevention and mitigation of financial frauds. Now we have a theme-neutral cohort as well. And it is very nice to see the ideas that come into these cohorts. And maybe around 30-35 entities were there who had their solutions being tested. 18 successful exits have also happened. Interesting part is the partnerships they try to bring in with the banks and other things, and request for some regulatory relaxations to be given as part of the sandbox. And we have not been hesitant, or we have not been refusing. We have given a lot of regulatory concessions, especially in cross-border space, where typically you have to collect the export proceeds. There were certain initiatives where people said that we would like to pre-fund that as well, so that the money that is lying abroad could be used for overseas payments as well. That's a wonderful thing. And if you would have been seeing some of the mention about offline payments, and even about the UPI being available for feature phone users, 40 crore of them are feature phone users. That's a thing that came through the cohort as well. And over a period of time, we are conscious of the comforts available to people who are part of this sandbox. So initially, we had a higher level of threshold for anybody to come in. We reduced the threshold in terms of net worth for participating. we said that you can choose what you want to bring in. So initially we gave those themes. Later we have removed the themes as well. You can bring in your theme and participate. And we have also tried to help the, like for example, talking to the banks and saying that why don't you facilitate. So learnings are all very good. There are more initiatives that are on the anvil as well as part of this. We are looking at more blockchain and DLT based solutions also coming up. Fraud is one thing. See, one of the things I want to tell everyone here, request also is that please don't look at the initiatives and benefits that are coming out of the system in terms of how many lenders or how many more customers you have onboarded. Please also look at making use of these platforms for better risk management for the people whom we are partnering with, maybe by way of customer onboarding, tracking, transaction monitoring, better collection mechanisms. So try to see how best you can make the ecosystem safer. Also participate in fraud mitigation, fraud controls that can be there. So all those things are possible in this partnership. So I would urge people to look at the use of AI, the use of sandboxes from these perspectives as well. So we can continue about the benefits. You please visit the RBI website. Wonderful details are there about each of these cohorts and the benefits that are there. We will continue to push the regulatory sandbox. Just 1 second, you talked about India, Singapore. Yeah, that's one again cross-border initiative that we have done. But another thing I would like to highlight is about the interoperable regulatory sandbox. I did mention about the difficulties that are there in harmonizing the requirements across regulators, but in the interoperable sandbox, if somebody has a solution that may transcend two regulators, that can still be handled, the principal regulator will take care of talking to the other regulator and getting those things done. So that's one more initiative I would like everyone to try.
Absolutely. I also noticed that we have just about 4 and odd minutes to go. And the one big thing that the RBI has consistently been talking about, and which all of us are interested in knowing more, is the digital currency. And in 2022, you launched both wholesale as well as retail pilots. Where are we in terms of really making it widespread and proliferating digital currency? Although, there are risks involved in terms of ensuring that the monetary policy, financial stability systems don't get unsettled by kind of arbitrarily bringing into existence. But where are we, and what is RBI's vision and way forward?
Yeah, thanks Chetan for not asking a question about whether we need CBDC when UPI is doing so good. I'm very happy because most questions come about this only. But I'm happy to tell you that we have been...
It was going to be my next one, but
I have preempted your question, so thank you. No, but what we have tried to do is to be on the learning scale as well. See, when we were talking about blockchain and other recent emerging technologies being available, we thought let us also try and experiment. That's how CBDC as an experiment came. See, anything that is digital, anything can move faster is very good. We have seen that happening in the digital payments. We are seeing that happening in the digital lending. So why not we also look at moving the currency flows also faster? See, all said and done, in addition to the upscaling of the digital payment systems, the currency volumes in the country are also significantly high, 35 trillion rupees. So if you can just think about a percentage or two of that moving faster quickly, it's going to be tremendous. And CBDC is one way of taking care of that. And CBDC, we also believe it can offer the convenience of cash. Still, if you see in India, around 40 to 50% of people prefer using cash because there are conveniences available. If those conveniences can be made available on the CBDC by way of anonymity, by way of programmability, we will be seeing some use cases that are going to be launched where you can actually use the money, CBDC like your currency. And of course, even you talk about currency being used, probably we may also have to look at the need for KYC when such wallets are going to be used. How we can de-link bank accounts and CBDC wallets. Those things are a priority for us. And we are also trying to see how we can actually have cross-border interactions where CBDC could be used. And we believe that when we have these cross-border exchanges, the present payment modes could be one way, CBDC could be another way, and both can compete with each other. And when we see the way the merchants get their money with probably a time lag, etc. In the case of normal payment methods, CBDC can help do away with intermediaries. And ultimately, it will be a central bank liability as well. So central bank balance sheet also gets digitized. So digitization is a way forward. And we are willing to learn and we are willing to keep the pilots on because it's going to be a national level project and we need to be doubly sure of what we are doing. One of the things we did as part of the pilot was to scale up the volume significantly during December last year, and that gave us certain insights about how technology is actually having some issue as well, so how we can actually take care of that. So it's going to be a learning project for some time, and probably I will be very happy if everybody is given a CBDC wallet with some money loaded as well. Let them go experiment and enjoy and see what are the benefits of CBDCs.
No, we've just run out of time, but I'll take the liberty of asking just one last question instead of summarizing our conversation and giving closing comments. What do you think of internationalization of our platforms? How do we take it global? There's a lot of thinking on what needs to be done. So final words from you on this one major strategy that RBI and the Government of India seem to be jointly pushing.
So you have heard many mention about how UPI is being internationalized. Many of the countries are already using UPI. Mauritius, if you look at Sri Lanka, if you look at Singapore, if you look at more countries that are going to come in. Ultimately, the idea is you carry your mobile in the same app that will be useful for any payment anywhere in the world. That's how we are doing. But more than that, we are also looking at making our RuPay cards international, issuing international cards in currencies that are international on the RuPay front. We are also trying to make our SFMS global. So we are looking at SFMS being available for any of the payment transactions to happen. You are aware that RTGS, NEFT, etc. run on SFMS. And let me also tell you that the volumes that SWIFT processes for international cross-border messages is much lower when compared to the volumes that SFMS processes. So we are trying to see that SFMS could be a way of going global. We are even looking at making our Infinite the network for everybody to use. So it will be a technology stack that we are trying to. Ultimately, probably we will be very happy to ring fence ourselves from whatever happens elsewhere when we have these technologies available with us. So it's going to be a nice journey together, and all of us will, as I was saying, maybe have more JFF in international locations, maybe have more discussions there, but India will be there everywhere.
Thank you. On that high and optimistic note, I'd like to thank the audience and thank you, sir, for this stimulating conversation.
Thank you for being here even when the regulator is speaking, means that we still have a say. Thank you.
Thank you, sir. If I could request both of you to please come together for a quick photo op. Thank you once again, Mr. Vasudevan. And thank you very much, Mr. Krishnaswamy. Thank you for sort of spearheading this very important discussion for all of us. And on that note, on that optimistic note, ladies and gentlemen, we're about to march ahead and we're about to get started with our next session shortly. For the benefit of the audience members, let me inform you that while we were to have the session featuring the Honorable Minister, Shri Ashwini Vaishnavji, however, due to unforeseen circumstances, Sir couldn't make it to the GFF 2024 as of today. So we will be moving ahead with our next session. I'd like to inform you all that the next session will be a special address featuring Shri Ajay Kumar Chaudhary, the Non-Executive Chairman, NPCI. I'd like to bring to your attention, that's the next session that will be taking place over here. It's a keynote special address that's being hosted inside the hall, featuring Shri Ajay Kumar Chaudhary. On that note, let me also inform you that the master classes are happening, so I hope you're taking some time off to register for the master classes and the roundtables as well. We have interesting and very, very different and diverse topics across each roundtable, so please be sure you're registering or you're part of relevant roundtables that you wish to be part of the discussion. That being said, please stay with us for the next couple of minutes. I've been informed by the team that we still have another 5 minutes before we get started with the next session. Stay with us. Please be inside the hall. We'll get the next session started shortly. Thank you.
Good afternoon and namaskar to everyone present here. It's okay? I have been given the topic to speak upon Fintech, AI, digital payments, how they are shaping the future of finance. Esteemed members of financial institutions, academia, press and media, colleagues from RBI, NPCI, and industry, Fintech industry specifically, and distinguished guests. It is an honor to be present at the Global Fintech Fest 2024. As we gather here today, let us embrace the opportunity to collaborate, innovate, and shape the financial landscape in our journey for developing an inclusive and sustainable financial system. Together, we can drive positive change and revolutionize the way we interact with money and tech. I would like to begin by recognizing the significance of this gathering. The Global Fintech Fest has rapidly evolved into a critical platform for innovation, collaboration, and dialogue in the financial tech sector. Now, in its 5th edition, GFF stands as a cornerstone of communication and creativity and fintech industry. The theme of this year's fest, Responsible AI, Inclusivity and Resilience, directly addresses the difficulties and opportunities that lie ahead for all of us in the fintech industry. Steve Jobs once said, quote, "Innovation distinguishes between a leader and a follower," unquote. As we convene to deliberate and investigate the significant transformations that we are currently taking place in the fintech industry, I am reminded of this quote. We are not merely participants in this global conversation, we are the leaders who are influencing the very foundation of the financial world. We must approach these advancements with a sense of responsibility and inclusivity. By fostering a culture of responsible innovation, I will define it subsequently, that prioritizes ethical practices, embraces diversity, and strengthens financial stability, we can ensure a more resilient and sustainable future for the financial system in general and fintech industry in particular. The landscape of the financial system is witnessing profound transformation. Unlike anything we have seen before, tech is at the heart of the changes, reshaping how we think about finance, how we interact with financial services, and how we approach regulation and oversight. The convergence of AI, artificial intelligence, tokenization, blockchain, big data, embedded payments, quantum computing, digital currency, CBDC, and other emerging tech is opening up new possibilities. But it also poses significant challenges. We must address the associated risks with foresight and collaboration to ensure that these tech are used responsibly. Now, looking at the global fintech landscape to understand how it is growing globally, the journey of fintech has been nothing short of extraordinary. Globally, fintech investment reached USD 58.2 billion in just the second half of 2023, and the sector is projected to generate an astounding of 1.5 trillion USD in annual revenue by 2030, which will constitute 25% of global banking valuation. Asia Pacific region leads this charge with the total fintech revenue at USD 90 billion in 2022, just the second region after North America, with the projected growth of 27% and poised to take the number 1 position in region globally by 2030 in revenue generation. Latin America and Africa is also not far behind. They are following this with impressive growth rate of 33% and 32% respectively. With policy support and tech advancements, the future of fintech looks promising for both investors and consumers alike. The global fintech landscape is as diverse as it is dynamic, from embedded finance to decentralized finance, from integration of AI and ML to DLT and tokenization. The innovations are endless. These technological advancements are not just redefining financial services, they are reimagining the future of finance itself. As the industry continues to evolve, the right mix of both competition and collaboration between the fintech entities and traditional incumbents, I mean banks, may be essential to drive innovation as also its adaptation. By leveraging their respective strengths and meet the evolving expectation of customers. The market force will ultimately determine the area of focus for each dynamic, I mean which area one should collaborate and which area one should compete. Now look at the fintech in India. India, known for its dynamic and swiftly evolving fintech ecosystem, it is at the forefront of this global transformation. India's fintech sector is projected to expand from USD 110 billion to an outstanding USD 420 billion over the next 5 years with a compound annual growth of 31%. Further, our nation is third globally in terms of the number of fintech companies with more than 9,000 entities at this point of time. Additionally, we have an adoption rate of 87%, which is significantly higher than the global average of 67%. The transformation of India's fintech sector from an emerging market to a global powerhouse has been nothing short of extraordinary. Initiative by way of DPI like UPI, Jam Trinity, Jandhan, Aadhaar and Mobile, and now ULI, Unified Lending Interface. Institutional support, supporting policy framework from government and regulators, and tech capabilities are helping the driving a revolution in fintech innovation in India and playing a crucial role in fostering an environment where fintech and fintech entities can thrive and continue to drive inclusive growth. India's journey in the fintech is a story of vision, resilience, and adaptability. It is a journey that began with small steps but has now reached a point where we are setting global benchmarks. The success of UPI, which recorded over 14 billion transactions, I'll repeat, the success of UPI, which recorded over 14 billion transactions with value amounting over rupees 20 lakh crore in July 2024, is a shining example of how tech, when combined with policy support, can transform the financial landscape. UPI has not only simplified payment for consumers, but also has empowered small businesses, enabling them to access a wider market and grow the enterprises. Similarly, the Aadhaar-enabled payment system, AEPS, what we know as, has revolutionized financial landscape in India and especially the inclusion. With over 1.3 billion Aadhaar cards issued, we have created the world's largest biometric identification system, ensuring that even the most marginalized sections of our society have access to basic financial services. The Jam Trinity, Jandhan, Aadhaar and Mobile has further accelerated this process, bringing banking services to the doorstep of millions of Indians who were previously excluded from the former banking system. If we may look at financial inclusion from the lens of access and more access, these enablers have truly revolutionized financial inclusion in India. The impact of these initiatives on India's economy have been profound. Digital payments have reduced the cost of transactions, increased transparency, and reduced the corruption. They have also paved the way for new business models, such as digital lending, which leverages data on cash flow to facilitate more inclusive and accurate underwriting to MSME and small businesses, which empowers them to grow and thrive in a competitive market. Today, India is home to over 30 fintech unicorns, and this number is expected to grow. People speculate that it may be more than 100 by 2030, driven by the promise of a digital-first economy. The rapid growth of the fintech industry in India has also attracted significant investment for both domestic and international sources. This trend is expected to continue in the coming years. India's leadership in fintech is also evident in the international arena. The launch of UPI Pay Now linkage between India and Singapore is a testament to the potential of cross-border fintech collaboration. This initiative enables real-time, low-cost remittances between the two countries, which is benefiting millions of workers, students, and businesses. As more nations look to replicate this model, as Governor Reserve Bank of India yesterday mentioned, India is well positioned to support the development of a global digital payment network. The success of this initiative could revolutionize international money transfer in a more efficient and cost-effective manner, creating a more interconnected world. Under the Global Digital Public Good Initiative, our vision is to support building a robust fast payment system globally and connect the world through sustainable, equitable, and inclusive payment corridors and technologies. NPCI International Payments Limited, our wholly owned subsidiary of NPCI, is at the advanced stage of extending UPI and RuPay card arrangements and its linkages with India in various other jurisdictions and entities, including those of UAE, Qatar, entities in France, Namibia, Peru, Bhutan, Sri Lanka, Mauritius, Nepal, etc., etc., and etc. Now we can touch upon some emerging tech. Application programming interface, what we know as API, and cloud computing are some of those new tech which are already being used widely by a significant number of incumbent banks as well as the fintech entities. As we look ahead, several emerging tech stand out as a driving force of the future of fintech. Artificial intelligence and machine learning are already transforming the way financial services are delivered, offering personalized experiences, predictive analytics, and enhanced decision-making support capabilities. DLT, distributed ledger technology, including blockchain, is reshaping the way we think about transparency, security, and trust in financial transactions. Embedded finance, where financial services are seamlessly integrated into non-financial platforms, is expected to drive significant growth. Looking ahead, quantum computing, tokenization of financial assets, unified ledgers, interconnection of financial ecosystem, which is popularly known as Finternet, as advocated by our Mr. Nandan Nilekani, launch of digital currency at population level, and many more such tech represents the next frontier in financial innovation, promising further enhancement of efficiency, inclusivity, and affordability of global finance. This may also help in unlocking the growth potential of the economy of any jurisdiction. In coming years, the fintech innovation will be particularly impactful in the B2B and B2B2X space. What we have witnessed last 5 to 6 years, the innovation primarily was driving the payment sector specifically. Now, it will be very critical for B2B and B2B2X space, where small and medium-sized enterprises, SMEs, have a USD 5 trillion credit gap waiting to be addressed globally. Let us now delve deeper into the transformative potential of AI/ML, because it's a topic of this theme of this fintech. The AI/ML tech significantly increases operational efficiencies by automating processes, enhancing accuracy, and ensuring consistency across financial services. AI-driven tools offer new personalized financial products and services tailored to individual needs, leading to better credit experiences. Moreover, AI's superior pattern recognition capabilities are transforming risk management by effectively managing large, unstructured data sets. This allows for improved fraud detection, money laundering prevention, and a deeper understanding of behavior pattern for more accurate underwriting. As regards quantum computing, though it is still at very nascent stage, it holds the potential to solve problems that are currently beyond the reach of classical computers. In finance, this could mean optimizing trading strategies, improving portfolio management, and enhancing encryption methods. As quantum tech matures, we can expect it to unlock new possibility in fintech and pushing the boundaries of what is achievable by using quantum model Fintech application can improve asset classification strategies, risk management, investment portfolio opportunities, optimization, and strengthening the financial decision making. Now, when we talk about lot of opportunities and the way the immense opportunity and possibility is opening up the new tech, possibly we have also look at the challenges associated with all this new tech. As is apparent, fintech innovation bring out lot of benefits, as I mentioned. However, new tech innovations can create new vulnerability. I'll underline. New tech innovation can create new vulnerability and also amplifying existing risks to the banks, their customers, and financial stability. These includes strategy risk by way of adjusting incumbents bank, incumbent banks' business models to increasing digital environment, as also their potential partnership and competition with fintech entities. Potentially, this heightened reputational risk, larger number of factors, testing operational resilience and operational risk, issue relating to data governance, etc. The system-wide risk may also be there due to greater interconnection nodes across the financial entities, heightened degree of contagion in times of stress, and amplification of pro-cyclical behavior. As regards risk specific to AI/ML, they may inter alia include challenges in data governance due to use of high volume, higher velocity, and different variety of data, issue relating to explainability of the model outcomes, model biases, and increased third-party dependency leading to concentration risk. Similarly, tokenization and unified ledgers, though create new opportunities, they may also raise system-wide risk due to greater interconnection of nodes across financial system and concerns on single point of failure. Likewise, embedded finance may expose non-financial firms to financial risk and regulatory scrutiny. The financial entities, they may also pose risk. Till now I talked about the technology, now I'm talking about the entities which are supplier of these fintech solutions. The fintech entities, they may also pose risk by way of market and business conduct, including issues related to consumer grievance redressal, concern on financial integrity, data privacy, operational resilience, enhanced cyber security, and financial stability. The challenge for regulators and industry leaders alike is to strike a balance between the fostering innovation and managing these risks. This requires a robust governance framework that prioritizes customer centricity, transparency, and accountability. I think this is the right time to quote Steve Jobs. He once said, "You have got to start with the customer experience and work backward to the technology," unquote. In the context of fintech, this means placing the needs and interests of customers at the heart of innovation. A customer-centric approach combined with a strong governance and ethical standards will be crucial to navigate the complex landscape in fintech. On the issue of good governance, it is glue to all systems and processes and essential for a sustainable fintech ecosystem. It is expected to ensure accountability, fairness, transparency across all its operations. A robust governance framework is essential for managing risk, fostering trust, and maintaining the integrity of financial system. It provides the necessary checks and balances that enables an organization to navigate the complexity of the digital age while aligning its operation with ethical standards and regulatory requirements. Within this broader governance framework, data governance also plays a critical role in safeguarding one of the most valuable assets of this date is data. To mitigate these risks, robust data governance arrangement and enhanced security protocols are critical. This requires ensuring that data is collected and used transparently, that informed consent is obtained from customer, and data is stored securely. Moreover, companies should adopt privacy by design principle, embedding data protection measures into their system from the start, rather than as an afterthought. Further, both the incumbent banks and fintech entities may mitigate specific tech-related issues by enhancing controls and ensuring, I'll repeat, by ensuring that human judgment remains the core part of decision making, risk management, and governance arrangement. Now coming to the aspect of the regulation, one of the key regulatory challenges in the fintech space is balancing the need for innovation with the managing risk. Achieving the balance is the key for allowing innovation that can provide benefits to the society without compromising the soundness of the financial system. Thus, as I always mention, the sustainable finance world would not depend on how the regulators design the regulation for fintech entities. It would largely depend on how the fintech sector balances its own wants against the need of customer centricity and good governance. In this context, the role of self-regulatory organizations in the fintech ecosystem cannot be overemphasized and overstated. These industry-led bodies may set standards, promote best practices, and may monitor compliance within the sector. They may also act as a bridge between the fintech entity, regulators, and consumers, and may proactively monitor the developments in the fintech ecosystem. This may help in achieving the objective of sustainable fintech ecosystem. I understand that RBI has already provided permission to one SRO yesterday, and I believe many more will come. Now coming to the international coordination, it is critical to manage the risk associated with bigger fintech entities, particularly those who are having the cross-border operations, as well as big tech entities. The growing need of harmonized regulatory framework is essential to address challenges related to risk from the scale, concentration risk, contagion risk, and enhanced risk on data privacy, cyber security, and financial integrity. Collaboration between regulators across border will be crucial in managing the risk associated with such entities. Now, before concluding, I may like to touch upon something which is emerging as one of the biggest risks for the financial system, that is the financial crime and the fraud. Financial crime and fraud have emerged as a global menace with over $3 trillion in illicit funds flowing through the financial system in 2023 alone, fueling crimes like drug trafficking, human trafficking, and terrorism. These crimes not only threaten the stability of the financial system, but also have profound social impacts, exploiting vulnerable populations and undermining economic stability in any country. In India, the situation is equally alarming, with cyber crimes happening of over rupees 1,750 crore in the last 4 months of 2024. The increasing sophistication of frauds, often leveraging AI and cryptocurrencies, poses significant challenges. Criminals have adapted quickly to the new defenses, utilizing tech like deepfake fraud and human-operated ransomware attacks to perpetrate complex scams at minimal cost. The role of money mules further complicates these efforts, adding layers of difficulty in tracing illicit funds. The need for robust measures to manage this risk have never been more critical. NPCI has been at the forefront of these efforts, implementing a comprehensive cybersecurity framework and leveraging advanced technology like machine learning and artificial intelligence to detect and prevent fraud in real time. NPCI has taken initiative including the real-time fraud risk monitoring and management. I'll repeat, real-time fraud risk monitoring and management, what we call as FRM, solution, and public awareness campaign, which are pivotal in safeguarding the financial ecosystem. Further, I know the multiple initiatives are being taken by multiple institutions. A pilot is also being run by our NPCI on identification of mule accounts, and banks are now being sensitized on the outcome of these models. They are very promising outcomes, and I am sure they will be very useful in identifying the mules and alerting the banks in advance in coming days. However, as financial crimes continue to evolve, it is essential to not only embrace new technology, but also strengthen cooperation and create awareness among all stakeholders. The collaborative approach is necessary to protect the integrity of our financial systems. In conclusion, by leveraging technology, embracing alternative data, and adopting customer-centric approach, the fintech sector holds immense potential to transform the global financial landscape. However, realizing this potential will require a collective effort. As incumbent banks, fintech industry, leaders, regulators, and consumers, we must work together to build a financial system that is inclusive, efficient, responsive, and resilient. The journey ahead of both exciting and challenging. We are at a pivotal moment in the evolution of finance, and it is our responsibility to ensure that the entry barrier to financial services is further reduced, are more accessible, and financial services generate the responsible innovations and lead the economic growth, and risk are managed in a way that protects the stability of the financial system. Let me leave you with a thought from the Peter Drucker, who once said, quote, "The best way to predict the future is to create it," unquote. Decisions we make today, the innovations we embrace today, and the risks we manage will save the future of finance for generations to come. Thank you. Now, I think my target was to finish it in 25 minutes. I completed it. Now I'm open to questions relating to this aspect only. For another 5 minutes, if any question, I'm happy to take that.
Hello, sir. Kavya from Entrepreneur Magazine. Sir, I just wanted to know, in your experience looking at the changes in the fintech space, what are some startups that you feel are really being bullish in their approach, or you have your eye on for bringing in further changes to the sector?
Whenever I meet fintech and fintech startup and their leaders, actually, it's very exciting because it's a learning experience always. Very, very sharp mind and very encouraging, actually, the way their thought processes and the way they want to see the changes, actually, in the financial landscape, as well as globally, how it can be done. As well as they are driven by wonderful tech backings. So it's a bright mind backed by technology. It's a wonderful combination. Possibly what they need, sometime, some of the entities are balancing the need, right, of today with the wants of tomorrow. So that is the main thing, and that basically requires, I mentioned it very clearly, that some dose of customer centricity, some dose of governance, and some dose of sensitization on regulatory requirement and expectation, if not requirement, expectations. So those things are, if taken care of, I believe that these opportunities are immense and they can grow in India or anywhere else.
Thank you, sir.
Thank you.
Yeah. Yes, sir.
Hello, this is Farid from Airtel Payment Bank. Just like the expansion done on the rails of UPI for Singapore, where all do you think that the next set of expansion can be done where the UPI rails can be used and the payments, as far as convenience are concerned, can be enabled across other parts of the globe?
I mentioned a few names here, and at the end I have told etc. and etc. Idea is just to facilitate wherever possible and wherever the requirement is. That NPCI is more than willing, and possibly Government of India is also supporting, along with the regulator support, that we want to go anywhere, we can go anywhere, and provide them all support so that they can develop their own fast payment system if they need it, as well as how to interconnect them to Indian fast payment system. So that basically we are ensuring. Specifically the Global South, our thrust is on this. But you are aware that we are also going to Europe, the Eiffel Tower, France, and Lafayette at France, and we are also moving to the South America and these European countries. It's an endless thing, and we believe that we have the potential to support the developing the global payment ecosystem seamlessly.
A quick follow-on question. What other things that you think can be done along the UPI rails? Let's say typically credit card, credit line, which is let's say personal loans. What else do you think can be enabled through the UPI rails and also applicable globally?
You must be amazed that every fintech this fest, we come out with 2 or 3 new features actually, and come and get it launched. Today also some few more features we will launch actually by Deputy Governor, Reserve Bank of India. Yesterday a few things were launched by Governor. And potentials are immense, depending on the specific requirement, evolving expectations from the customers, right? Exactly what they need, because this requires the understanding the customer journey and understanding that what they need. And accordingly, our endeavor is to provide these expectations and meet those expectations in at the earliest possible in a seamless manner. That is the way possibly we are looking at it. And it's not ending with the UPI, because you have to integrate with the CBDC, we have to integrate with the tokenization, we have to integrate with interconnection of the all financial ecosystems, and think of digital asset management in future, and where the payment system basically will enable the transaction, monetize this settlement by way of digital currency, etc., for against the digital assets. So all those things, this next 5 to 6 years looks very, very exciting. I believe Nandan has yesterday spoken about the Finternet. That itself is a very exciting concept. And if we achieve even 50% of that, that will be a great, I believe. I believe that next 5 to 6 years will be quite challenging, and whatever we are doing today, we are going to reshape actually the entire financial landscape of the country and the globe. And we are leader in that.
Thank you. Thank you for your time.
Hello, sir. This is Abhijit Patil from Adarsh Credit Society. I want to know more about the ULI. Can you shortly prescribe us what ULI and when it is going to come up?
ULI is, earlier Governor has mentioned that it was an integrated tech platform for frictionless credit, right? ITPVF. It was announced by Governor in August 2023 monetary policy, right? And we had started pilot from that day. This is with the renaming of them as a ULI and possibly giving them certain more impetus by adding more services, by adding more states under this umbrella of this ULI. I believe that it's a game-changing situation, in the sense that in the lending side, any lender, actually borrower can approach the lender on the app or assisted mode, and the lender can get all the information required to facilitate them to underwrite the borrower within few seconds. And if that is possible, they can reach a decision through this platform, what we call ULI platform. It's again the digital public infrastructure. Means anybody can plug in and get all information in a seamless manner. And once it is done, then you can decide whether loan can be given or not. If it can be given, they can be communicated within few minutes, and possibly it can disburse within few minutes. We have demonstrated that, Ms. RBI has demonstrated that in case of dairy, in case of agri loan up to 1.6 lakhs, because it was collateral free, and MSME loans, those loans were disbursed within less than 5 minutes. So it's a phenomenal thing. The way it will scale, actually, it looks very exciting. Possibly next one or 2 years, all the frictions possibly, specifically for the small ticket loans, will be reduced.
Thank you. Thank you very much.
Yeah, thank you. It's a pleasure. Thank you.
Thank you, guys. Ladies and gentlemen, can we have a louder round of applause to thank Shri Ajay Kumar Chaudhary? In fact, in his words, as he had beautifully mentioned that India's journey across fintech is truly setting global benchmarks. We thank you, sir, for your valuable time. And on that note, we're now about to set the stage. We're about to literally set the stage. So I'm going to request you all to please oblige with me. Please stay with us. We're about to get up for another dynamic session coming your way. Before we do that, I'd also like to take the opportunity to thank our speaker lounge partner, OneCard, diamond partner, Credit Saison, hydration partner, Rupee Ready, gold partner, Ease Buzz, silver partners, Findi, Confluent, Beams VC, and bronze partner, Vakranji and Vampe. We'd like to thank all our partners as well. And with that, we are now gearing up for a very riveting discussion around the evolution of banking, past, present, and future. And this afternoon, we in fact have the presence of one of the most dynamic leaders who is a shining example of remarkable growth. So we're about to get the conversation started in a jiffy. So I'm going to request all of you, everyone who's just entered inside the hall, to very quickly please take your seats. And with that, ladies and gentlemen, the next session, in fact, this session is about to begin. Now, to spearhead the session, we have with us Ritu Singh, Deputy Editor and Anchor, CNBC TV 18. As we often say that to get the right answers, you need the right questions. It's only befitting that Ritu will be spearheading the session. And this afternoon, at the Global Fintech Fest 2024, we have the august presence of none other than Shri Dinesh Khara, Chairperson, State Bank of India. So please put your hands together, ladies and gentlemen. Please help me welcome on stage Shri Dinesh Khara, Chairperson, State Bank of India, and spearheading the conversation, Ritu Singh, Deputy Editor and Anchor, CNBC TV 18. Thank you very much, sir, for joining us at this edition of Global Fintech Fest. Thank you, sir, and thank you, Ritu. Over to you.
Thank you. Thank you all. The topic of this session, interestingly, is the evolution of banking, the past, present, and the future. And we couldn't have asked for a better person to lead this chat, because not only is Mr. Khara, the recently retired chairperson of State Bank of India, which is not just the country's largest bank, it is also one of its oldest, and it's unbelievable, the kind of journey that it's had. But, before anything, Mr. Khara, I want to congratulate you on your illustrious run as the State Bank of India chairman. Some have given you the moniker of the profit maker, the 200% kind of increase in profits we've seen, credit costs coming down to just 47 basis points, and a 325% return on stock during your tenure as the SBI chairman. So congratulations on this fabulous run, Mr. Khara, and thank you again for your time here today. Let me just trace back the evolution of banking. And, if you just look at State Bank of India itself, started in the first decade of the 19th century. That's why you trace your origins to the back of Calcutta, of course, then the Imperial Bank, and now, as we know, you State Bank of India. What to your mind have been some of the most significant banking reforms that have taken shape, whether that be nationalization to liberalization, to more recently with GST, with the IBC, that have had the most profound impact on the way banks that we know to them today function?
Thank you very much, Ritu, first of all, for giving all the credit for the kind of performance which the bank has demonstrated in the past couple of years. Well, of course, it gives a lot of satisfaction to see that kind of performance, but nevertheless, there's nothing but a reflection of the team effort of all SBIans. Now, when you talk about the most profound changes, I would say that banking is actually the proxy to the economy. And we have seen that from time to time, whatever be the need, the banks have evolved. Way back in 1955, when the Gorawala Committee had recommended that there is a need for agrarian reform, that's a point of time when State Bank of India came into existence through an act of parliament. And the expansion of the branch network took place in the rural India. Happened to see that, always right from the second plan onwards, it was always infrastructure-led investment which took place in the country. And of course, we have seen the benefit of that. We have seen countries which got independent almost the same time. But where are we, where are they? So it is all because the banking sector stood by the economy and tried to contribute. So that was the first major reform. Perhaps encouraged by the kind of financialization it started having because of the State Bank of India moving into the upcountry areas. It was a nationalization which took place in 1969. Then later on, the second phase of nationalization also took place. I think that was an imperative need at the material point of time, that there was a need for expanding the branch network. Then came 1990 with the liberalization of the economy. That was a point of time when it was felt that now it's a time for bringing in more competition, and private sector banks were given the license, which actually worked as a catalyst for the public sector banks too. And they also, particularly for State Bank of India, I can say that we were all geared up to meet this competition, and we ensured that we stay ahead of the curve. Next comes the era of 2000. That was the advent of technology, adoption of technology to a greater extent. By this time, we have started moving from the distributed computing to centralized computing. That is the foundation stone when it comes to the today's digital architecture which we get to see. And of course, now it's a history that we have seen that how the adoption of digitization has happened. Then came Jan Dhan. It was actually 2004 onwards. It was a jam trinity, Jan Dhan, Aadhaar, mobile, and it led to a situation where it was a democratization of the banking services through the Jan Dhan account. So this is something which happened. And today, thanks to that Jan Dhan trinity, we have got a situation that when it comes to, we have actually seen the benefit of this when the COVID struck. And on day one, when the common man was required to be given a certain amount of money in their hand, and how fast we could make it happen. So I think it is nothing but that technology which has given us that prowess today to take care of the financial needs of the common man of the country. And of course, now we have come to a stage where we are looking at not only meeting the needs of the common man, but also ensuring that we should meet the aspirations of the common man too. And also we are moving towards hyper-personalization, which means that all this while the data was static. Now that static data is being put to use with the help of analytics. Various algorithms are being developed, and based upon that, we're in a position to do the hyper-personalization. And of course, this analytics is now turning to be handy when it comes to risk management, when it comes to prediction in terms of the behavior, the customer behavior, you name it, and we're in a position to leverage the analytics in that direction. So this is the broad canvas in which the banking has evolved in the last couple of years.
Sure, that's a fine encapsulation, Mr. Khara. But, as a legacy bank that's nearly 200 years old, to transforming into what State Bank of India today is, carrying the burden of the past, but now with a fully digital arm with YONO, if you could take us through that transformation journey, the challenges that you came across, and would you say the transformation is complete even in 2024?
Well, we have now 80 million registered users already there, and almost about 10 million users are logging on a daily basis. So I think in many respects, it would be a record of sorts across the globe. I would say that when we had envisaged YONO, we thought of YONO only as a retail solution. And initially it was thought to replace the internet banking. But when we introduced YONO, we thought that no, it should be much beyond that. So it's actually a combination of three. It's a pure play banking, it's a financial superstore, and it's a e-commerce. All three embedded into one is YONO. And since we have got a huge existence in terms of all our financial sector subsidiaries, we're in a position to showcase their products. We can source the credit cards through YONO. We can source the investment for SBI mutual fund through YONO. We can source life insurance policies through YONO. We can source general insurance policies through YONO. So I think in many respects, it's a very unique proposition where we are not in a position, we are not only offering the solution in terms of the financial needs, banking needs, but actually the financial needs. So to that extent, it is certainly a value accretive for the bank and also for the customers. It's a convenience. And I would say that we have started looking at the volumes it is generating. Last year, we generated almost about 1.7 trillion worth of loan underwritten through YONO. And they were essentially into the pre-approved business loan, pre-approved personal loans. We are giving in principle approval for the car loans and the home loans also with the help of YONO. Now we have gone beyond the retail. It is now being used for the YONO business when it comes to opening of LCs, bank guarantees, etc. All that can be done through YONO, and it's a huge adoption which we have seen. YONO has gone beyond the boundaries of the country now, because in the overseas locations, we have got very light footprints, and generally the customer base is quite broad-basely spread out there. So just to cater to their needs, we have got the YONO for various global destinations also. Yeah, and now we are working on YONO 2.0, where the intention is that it should be made more modular. It should be made more faster in terms of processing, and I'm sure the path which you are following, we will get to see the YONO in new avatar. We have already seen some of the additions which you have done. They are happening seamlessly. Minimum viable products are getting introduced. Yeah. And that is something, and also its rating is getting improved, most important.
Well, State Bank of India really prides itself for being the banker to every Indian, right? And a large part of that reason is because of your physical presence on the ground. To what extent do you think this physical branch banking can be replaced by digital channels? How soon before you see increasingly, the bulk of your incremental customers and incremental business only coming through the digital channel?
It's an interesting question, because when it comes to the kind of customer base whom we serve, happy to share that State Bank of India serves 50 crore customer, which is almost 1/3 of the country's population. And when we serve 1/3 of the country's population, we have to take care of all kind of customers, their preferences. So we actually look at YONO as a distribution channel, one of the distribution channel. The way branch is a distribution channel, YONO also continues to be another distribution channel. And what you mentioned in terms of can the physical presence be replaced by YONO, or the YONO can replace the physical presence, or either way out, I think it's an era where any commercial organization has to think in terms of multiple channels of distribution. And to my mind, there is a scope for coexistence of both, even in the foreseeable future.
Well, I'll quickly step away from the institution itself to larger, some of the more present issues that the banking industry finds itself in today. A few years back, the whole talking point was about bad loans and how banks were cleaning that up. And now banks have emerged healthier with stronger balance sheets. But as the governor often repeats, it's in good times that lenders should not let down their guard. That's something that the regulator highlighted with unsecured lending, and we're seeing that play out now with banks reporting higher stress in their retail book. But to your mind, now that we're in these good times, what are some of the emerging risks to be wary of, for the present generation of banking?
Well, rightly said that invariably the mistakes are committed in the good times, because if at all you take away your sight from the road and also the steering wheel, the accident can happen anytime. So that is one of the reasons why for any banker, good time or bad time, a risk is always to be kept in mind. Normally, at times people tend to ignore the risk, but that should not happen. And for that, I think now the system has strengthened quite a lot in terms of the infrastructure, in terms of the MIS, which actually ensures that there are early warning systems in good time, which actually gives a good opportunity to plug any such chances of any accident. So that is, I think, which has happened. But yes, of course, going forward, what you mentioned in terms of unsecured lending, there are different variety of unsecured lending. There were people who were not even looking into the income streams and were going ahead and lending. So those are the people where there could be challenge. But yes, of course, if at all there is a adequate assessment in terms of the income flows and the certainty of the income flows and the EMIs, then perhaps it may not be as much of a challenge. So much of it will depend upon unsecured credit to which category of customer and how much. So that is something which is going to define and determine how this unsecured book is going to look like in the different banking.
Well, that's something to keep in mind. But, the other issue that's really dominating, the conversations among bankers is this scramble for deposits. And that's because, household savings typically, which would, stay in vanilla bank accounts, are moving out because there's more financialization. They're on the hunt for higher returns on their, savings. And also, of course, tax efficiency. Do you see a structural, problem emerging for the banking sector to tackle, with especially as we're seeing more and more banks look at the digital route, not so much as the physical footprint? Do you see this impacting credit growth as deposit continues to lag?
Well, this is something our Chief Economic Advisor, Dr. Soumyakanti Ghosh, has come out with a report, and which is actually based upon the RBI report, where he has analyzed that we have seen similar kind of a situation way back in 2003-04 also. And his assessment is that normally it takes anything up to 41 months for this divergence to get addressed. So I think our assessment was that by the June 25 or so, this should get addressed. But nevertheless, there are multiple options which are available to take care of the loan book growth, which I mentioned in the past for State Bank of India also. We had mobilized deposit at a point of time when nobody used to look at deposit during the COVID period. We have created an investment book, which is, even today also we have got investment book, which is almost about 3.7, 3.9 trillion. And we can easily unlock that investment and support the loan book growth. And of course, deposit is a franchise. Just to address that, in certain time buckets, we did tweak the interest rates. But yes, of course, any banker has to always strike a balance between the deposit cost and also the NIM. There's a trinity which needs to be met. So eventually, how to meet that trinity is nothing but a skill. So I think the skillful handling of the situation is something which will see the bankers sailing through the difficult times.
Well, that's a very clear, definitive timeline you're giving for when the problem may resolve itself. But, back to the theme of digitization, the digital transformation of the economy, are banks today, and especially legacy banks, public sector banks, adapting fast enough? Because if you speak to the audience, they'd probably say, when it comes to payments, not many are using their traditional banks. Banks have probably missed the payment revolution bus. But now that we're talking about the unified lending interface, the increasing, focus towards digital instant loans, are banks adopting fast enough, or is that something you worry the fintechs may again take a lead on?
I think there are various reasons why perhaps when it comes to payments, they seems to have lost out, but they have really caught up in the recent past as far as their technology upgradations were concerned. As far as the lending is concerned, many of them have already gone for adoption of the apps, and also I think digital lending is becoming increasingly popular. And eventually, when it comes to various alternate vehicles which are available for the digital lending, I would say that at least banks, because of their network, they have got a reach, which perhaps may not be there. And also in the financial sector, perhaps the larger balance sheet gives some kind of a resilience to the system as well. And also, you know, keep in mind that the compliance costs are huge and they are increasing every day. So there has to be a minimum critical size for any entity to really make a meaningful business out of it.
Well, speaking of the compliance burden, we recently had the Digital Personal Data Protection Act being passed. Seeking the consent of customers for every sort of transaction that you make every time. The rules itself, of course, are yet to be firmed up. But how do you see that changing the way some of the business models are built around this digital lending? What sort of challenges or opportunities do you think that may bring for the banking ecosystem?
I think we have been engaging on this DPDP Act for almost a year plus, and we were very carefully understanding what is the intent of the DPDP Act, though the regulations are awaited any time now. We had started doing some preparations already, and yes, of course, it will certainly need to revisit the way the banks do the business, or for that matter, why only bank? Any commercial institution in the country will have to be probably look into the regulations and its impact on the way the business is being done. There are huge responsibilities which are cast in terms of the intention which is indicated in the DPDP Act. So it will eventually get converted into regulation very soon. Just anxiously waiting how the regulations will look like.
Well, Mr. Khara, we're running out of time. So a final word, if I were to ask you what the banking ecosystem may look like in, say, a decade from now, with the new forces emerging, the technological transformation, the adoption of AI, the new Jam Trinity with the unified lending interface, open banking and whatnot, what are some of the forces that you think will most shape this ecosystem? What worries you most? And what are you most hopeful about?
See, to my mind, banking will be more like any other consumer entity where there will be plethora of products which will be available. Perhaps there would be need for doing some kind of a tailor-made solutions. And to that extent, banking is going to be a knowledge industry, will not be as much of the service industry or the transaction industry. And this is how I perceive the banks to be in the days to come. And of course, consuming technology, consuming analytics, consuming the latest in the area when it comes to customer behavior understanding, all these will be consumed by the banks, and perhaps effort will be to create solutions, tailor-made solutions. That will be the endeavor on the part of the banks.
All right. On that note, Mr. Khara, it's been a pleasure chatting with you, and thank you very much for sharing your 4 decades of experience in the banking sector and how some of that past may influence the future. Thank you very much for your time here today. Thank you all for being a wonderful audience as well. Thank you.
Thank you very much, sir. And thank you very much, Ritu. Ladies and gentlemen, after that dynamic conversation, it looks like we managed to set the tone as to what really we will be expecting in the future with regard to banking, and who better than the leader himself to share his valuable thoughts with us. Let me also inform you that we are gearing up for the next session in the next few minutes. What we're about to do is get our next session started after the next couple of minutes. I'm going to request all of you to please be seated. Before we move ahead, I'd also like to thank our agenda partner, HSBC, Gourmet partner, Pay10, Fintech enabler, ThinkTech, Gold partner, BriskPay, Silver partners, InSolutions Global, Pay with Ring and Z47, and Bronze partners, MTech Innovation and NCR LTOs. So while we thank our partners, ladies and gentlemen, Let me inform you that our next session, as per the agenda, I think this is where we are strictly following a very good timeline. 1:35 p.m. I've been told 1:35 it is when our next session begins. Meanwhile, I'm going to request all of you to continue being seated. Thank you.